everybody, what's up? Friday, June 21st. Stock market taking a little pause at the moment after making new all-time highs, as I told you would happen. I am seeing a little bit of evidence in some areas that the rally may be reaching a point of being a little bit overextended. Mostly I see that in put-call ratios. Okay, now it's not flashing crazy overbought or crazy bullishness, and certainly not in the weekly sentiment surveys, but in the put-call ratios there has been a noticeable drop in those levels, which would indicate a higher level of bullishness now. So there could be a pullback here, and in addition to that, we are coming into a time window. Remember those reserve flows that I've been talking about? I mean, we, meaning myself and my subscribers, have a particular insight on this that nobody else has, and I've been talking about it, alluding to it here on these videos. If you really want to have an understanding of this, you have to sign up. Go to my website, pitbulleconomics.com, sign up for a 30-day free trial, and you really should, keep that report coming beyond 30 days, but I'll let you judge. I mean, there's nobody out there who does what I do in terms of this type of analysis, looking at things through the MMT perspective. And again, there aren't even the MMT people don't do what I do when it comes to this and this understanding. And that, this reserve flow thing, the fiscal stuff, I mean, that's pretty obvious. I mean, the government spends more money. Look, GDP has 4 components, all right? It's like a recipe, all right? You have personal consumption, that's what you and me and everybody else spends money on. You have business investment, that's what businesses invest in and consume. You have government spending, all right? And you have net exports, that is exports minus imports, and that's always a negative because we run a perennial trade deficit, so that subtracts from GDP. But those other 3 components, consumption, business investment, government, if I can create any level of GDP growth that I want by manipulating those components. Okay, those are like things in a recipe. You want higher GDP, you could increase government spending, and that has been what it. Look, despite everything, okay, despite the tariffs and the trade wars and all this other stuff, we're in positive GDP growth, all right? And this quarter, it's going to be around 2%, maybe a little bit higher. It started out in the initial forecast. If you look at like the Atlanta Fed and some of these other outfits that put out forecasts around the end of April, when their first forecast came out, they were about 1%. And I said that was going to end up going up. I said they were going to be revised up, and sure enough, now they're above 2%. And what's interesting is 2%, I mean, like back in the Obama days, 2%, that was considered like a decent level of GDP growth, of economic growth. And now the Fed is talking about rate cuts with 2% growth. So that's really going to throw the fuel on the stock market rally. Anyway, what was I saying? Yeah, so we are maybe seeing a little bit of an overbought condition here when you look at some indicators like put-call ratios. Oh, I was talking about the reserve flows. So anyway, the fiscal stuff, some people get that. I think most of the MMT people understand that. But the reserve flows, this is very, very interesting. And as a matter of fact, today, somebody sent me a chart today that was very eye-opening. It was a fascinating chart. And it showed, and if you want that, again, go to my website, sign up for a 30-day free trial of MMT Trader, go to pitbulleconomics.com. But I'll explain it to you here. It shows an historical perspective of the Fed's balance sheet. And in the 1920s, leading up to 1929, there was a very significant expansion in the Fed's balance sheet. What does that mean? When the Fed expands its balance sheet, it is pumping in billions upon billions of reserves into the banking system. So it's loading the banking system up with reserves, okay? And you saw, it was very clear in this chart, it was like a sudden and then a very significant expansion in the Fed's balance sheet all the way into 1929. And then what happened? We had the crash. And then the Fed brought its balance sheet way down, and then what happened? You started to, the economy, not just in the United States, but globally, started to pull out of the Great Depression. And fast forward, and then we had pretty much, you know, steady growth. And then you had, in 2007, 2008, after the Lehman thing failed, the Fed expanded its balance sheet wildly, crazy, again, taking it up unprecedented to what, 2.4 trillion. I'm sorry, with over 4 trillion, and what, we had the Great Recession. And then as the Fed started to reduce its balance sheet again, we've had this period of growth steady. So very fascinating, this correlation between, and by the way, if I can mention, Japan's been doing this for 20 years. And the Bank of Japan is like, we don't understand why the banks are not lending. We don't understand why growth is so slow. We don't understand why we can't gin up inflation. They are piling trillions and quadrillions of yen onto bank balance sheets. And then the banks, as I explained in the last video, even though those reserves don't require capital per se, banks are subject to leverage ratios. And the leverage ratio, assets, total assets factor into that, of which reserves are part of bank assets. So they have to raise capital. When the central banks dump all these reserves on them, they end up having to raise capital anyway. So, or they have to cut back on their accumulation or creation of other assets such as loans. And we're seeing the same thing happen in China now. Recently, over the past month, China again has been pumping and pumping and pumping. And they think they're doing something supportive to the economy when in fact they are clogging their banking system up, loading the banking system up with billions upon billions of reserves that the banks don't need. Now, I told you in prior videos, the Fed last year, this just happened last year, the Fed sent out a survey to banks, to commercial banks. The Fed itself sent out a survey asking the banks, what is the ideal level of reserves you guys think you need? And the banks responded, and you know what they said? They think 600 billion would be fine. That's all we need. Meanwhile, there's 1.5 trillion in the banking system, and that's down from 2.4 trillion, so at least that's down. But now the Fed is saying, we're done reducing. So what was the point of the survey? Your own member banks are telling you we only need 600 billion. The Fed completely ignores that and says, well, okay, well, Powell says, oh, we're going to stop here at 1.5 trillion. They don't need that much. It impedes their lending, and when they can't lend, the economy feels it. All right, it slows down. Economic growth slows down. So, I mean, we understand this correlation. I understand this correlation. And I gave you kind of a macro perspective of how that works, but it's tradable. It is tradable. Especially now with the debt ceiling. Because it's like this, up and down and up and down, with the Treasury unable to sell securities, bonds. They can't maintain a steady level of reserves in the system. So this sloshing back and forth comes from, you know, monthly expenditures that the government does, which piles reserves into the system, and then tax collections, which sweep those reserves out again. So you have this up and down and up and down, and that's what's causing the volatility. And it's tradable. Nobody understands this. It's tradable. Really cool stuff here. I don't need to be an algo trader, all right? spending $20 million to have a hookup really close to the servers in the exchange so I could jump in front of the orders. No, I mean, I don't need that. I have a greater advantage with understanding and knowledge, right? These guys, they got to employ all these computer, coders. They got to set up their hardware right near the exchanges. They got to pay. I just read a thing like Virtue Financial, the biggest one of these algo, had to spend $20 million out there in Illinois to set up their servers really close to the CME's operations, computer setup out there. Are these guys smart? 20 million? I don't need that. Because I understand how the monetary system functions. I don't need that. I do way better. Intelligence, knowledge, information, and mental game. All right, everybody. Hey, it's the first day of summer. Yeah, very happy about that. It finally stopped raining here in New York City. It's going to be a nice weekend. Everybody, have a great weekend. Bye.